Welcome back. Singapore fund managers are heading into 2026 feeling cautiously upbeat. 9 in 10 expect the Straits Times Index to hold or rise, even as global risks linger. Now, these insights come from a survey by the Investment Management Association of Singapore, or IMAS, capturing views from senior executives across more than 60 firms. And joining us now to discuss further are Mr Thomas Kaegi, Chairman of IMAS Development Committee, as well as Mr Dhananjay Phadnis, a member of the committee. First to you, Thomas. Thanks for joining us, by the way. Now, your survey reflected the views of fund managers that oversee some $35 trillion in assets. Now, what does it say about the strength and the resilience of Singapore as we head into 2026?
We conduct this survey every year around year end, and we ask our member companies about their expectations for macroeconomic outlook, for markets, as well as for industry perspectives. Now, overall, I would say it's a mixed picture. On the positive side is clearly that our members are very positive on the outlook for markets, particularly here in Asia, for China, where they expect double-digit returns. So that usually helps asset managers. It means higher revenues. On the flip side, you have many of the challenges that the industry has faced over the past couple of years. They stay with us. We have margin pressure brought about by moving to passive and other managers entering the market, particularly on the alternative side. So that means local asset managers need to continue to innovate and stay lean. And that's also an outcome of our survey, is that we asked specifically on the use of AI in their operations, and 60% and more of the members are using AI increasingly in their operations, from research to investment management to operations, as well as on the client coverage side, to improve the productivity of their employees, but also to save costs.
Yeah. That's an interesting point. I also picked up, though, that nearly 9 in 10, almost all of them, expect the Straits Times Index to hold steady or even rise next year. But point to the specificities of what's driving that confidence, even though we're in the middle of all this geopolitical risk.
I mean, first of all, geopolitical risk and uncertainty is not new for investors and asset managers, particularly over the last 5 to 10 years. There has been an ebb and flow and surprises, and we've learned how to deal with this. It might lead to a short-term correction, but overall it hasn't deterred the strong rally of risky assets over the last couple of years. The other aspect on Singapore specifically, there is the geopolitical or the macro environment where we're operating in, where we see still substantial growth ahead for the global economy. Interest rates are coming down. A majority, actually 75% of our members, expect 50 basis points or more cut by the US Fed. That will support risky assets. And then there's clearly also a few domestic factors. You have resilient bank earnings in Singapore. You have high dividend yields. And the government has been actively trying to stimulate the local equity market. So all of this should help.
Well, Dhananjay, Thomas is obviously optimistic about 2026. But, you know, some of your bankers, some of your members, your managers are saying that they are cautious because it may not be sustainable. So what do you think could trigger a sudden change in sentiment?
Yes, you're absolutely right. I think one of the risks that our members highlight is that the rally we've seen in 2025 is simply not sustainable into 2026. Having said that, and if you look at the backdrop, it still continues to be quite strong. And like Thomas said, we're expecting Fed cuts. AI, which has been a fairly transformational technology that continues to kind of move on. But of course, investors are correct to think about whether the trends are sustainable. To my mind, it all boils down to earnings. And if earnings continue to come through, the outlook will remain positive. But that's obviously where the risk is as well.
Are you also worried about the growing political pressure on the central banks, Thomas? Because 6 in 10 of your respondents are. If the central bank independence comes under strain, how does that change portfolio strategies, risk-taking?
You're absolutely right. It's a concern. I mean, central bank independence is the cornerstone of macroeconomic stability. And weakening central bank independence, you can look around and you don't have to go too far back to see examples what can go wrong if politicians chip away from that independence. Name Turkey or Argentina are more recent examples. The transmission channel is usually through inflation. inflation goes up, inflation is more volatile, and that's not what investors like. And as such, it's usually bad for nominal bonds, maybe positive for real assets such as infrastructure, real estate, or commodities. And therefore, investors and asset managers have to adapt their portfolios for that outlook.
Okay. I'm sorry, Dhananjay, just bring you in here, because the other thing we're looking out for is Japan and China. They've really overtaken India and Singapore as very top-rated markets in 26. What's behind this shift in conviction, and do you think it's just cyclical or structural?
Yeah, you're absolutely right. So what we do is we poll our members to say, which is your best performing market? Which market do you expect to perform the best, and which do you expect to perform the least? The way I like to look at it is to look at the skew. So if you look at most positive minus people rating it as most negative, and you can see that exactly Japan and China come out on top. And to some extent, it's continuation of the trend we've seen in 2025. But here I would like to also say Singapore stands out quite well as well, because you can see the positive skew for Singapore is quite pronounced. And this is pronounced in terms of reference to other markets like India, Taiwan, and other ASEAN markets. You know, the three markets which I think investors have high hopes for in terms of our members is China, Japan, and Singapore.
Absolutely. And I'm afraid we're going to have to leave it here, gentlemen, and have you back another time for a more in-depth look. I've been speaking there with Mr. Thomas Kaegi and Mr. Dhananjay Phadnis from IMAS, and I want to thank you both once again for being here.